Of today. Now, it is Financial Planning Week coming up, and while the focus is largely on personal finance like retirement planning, we'd also like to focus today on how businesses can future-proof their financial strategies. But I guess whether you are an individual or a business, financial sustainability is key to your survival. It is really all about driving growth. It's about managing risks and ensuring long-term success. Joining us this afternoon is Stian de Witt. He is Executive Head of Financial Planning at advisory firm NMG Benefits. A very good afternoon to you, Stian. Good to have you with us on today. So we've got this, Financial Planning Week coming up. Traditionally, what happens during this time of the week? What are the key issues that are being focused on during this week?
I think traditionally, Tammy, it was more about making sure people save for retirement, having enough life insurance. But what we've actually realized is there's two major questions that most people want to have answered. The first one is, if something happens to me today, will my family or myself be okay if a risk, if a risky element comes into my life? And the second question is, how will I make sure I'm okay for retirement or for my business if I need to succeed or go into retirement? How will I make sure that asset will actually help me sweat going into retirement, that I'll be okay? So for us, it's about the two sides of the coin, which is actually the same coin.
The same coin, and it's on the latter part of it. When we talk about if something happens to you, are you going to make sure that you're okay? What are the pillars that need to be in place to ensure sustainability for yourself and your families should the unfortunate happen in your life?
So Tammy, it is not just making sure you have enough life insurance, because a lot of times our businesses, or if you work for a company, you might have a pension or provident fund that gives you sufficient insurance for that. It also combining it with proper estate planning. Make sure that your plans that you have, if something had to happen to you, is actually executable. So managing that type of risk. And also for business owners, one of the major, some people only have an asset that is a house. That's probably their biggest asset they'll ever acquire. But for a lot of business owners, their business is their baby, and it is the biggest asset that they will ever acquire. And when they retire, they want to make sure that asset is actually viable to be sold. So in the interim, making sure your contracts, things like your if you're in trust, the trust deeds and a lot of legislation like that are actually kept up to date, and your whole team with you make sure that you'll be okay, and all the risks involved when it comes to assets, when it comes to businesses, when it comes to trust, are also taken care of.
Now, we are in really stringent and uncertain economic times. How exactly does a business go about taking stock of their financial standing? What are the considerations that need to be made?
So when it comes to business, they say there are only three rules: cash flow, and cash flow. So making sure your cash flow is sustainable is very important. Make sure you have long-term sustainability in that is really, really important. Jim Collins, in one of his books, Built to Last, spoke very, very highly of that, in making sure that when you go through tough times, you are able to maintain that cash flow, because that is when you actually see most businesses grow, is when there is a tough time, like what we see in COVID. So that's on the one side of the coin. On the other side, when it comes to your risk, your insurance risk, your succession planning risk, making sure that even your staff, your key staff members are taken care of, so that if something had to happen to them or to you, that the business will be able to continue and you have your succession planning taken care of.
And where is the best place to keep your cash flow? Because you want it to also make money for you while it is not being utilized.
The best place is something like a money market account. A lot of people say, now go to the stock market. The problem is you need immediate access to that money. So if you go to the stock market and there's a crash in the market and you have a 20% downturn on a portfolio, if you want to have R1 million, now all of a sudden you have 800,000 Rand and you can't utilize that money. And you need immediate access to that. So a 32 call account is not ideal, because cash flow is something that in a business can very, very quickly turn south, and you need to have immediate access to that. So For a lot of our clients, we say a corporate cash management account or a money market account is the ideal.
And what would the advice be for individuals? Where do you keep that cash flow if you're not a business?
So the same rule applies. 2 to 3 months worth of expenses, keep it in a money market or something that is very, very easily accessible. That should be your ideal cash buffer. We saw that in COVID as well, where the individuals that had that money market cash flow buffer, they were actually able to sustain themselves when they went into short time, where businesses said to listen, I have to retrench. So that is the ideal. More than that, there are other options going into fixed income funds or unit trust portfolios that will also give you immediate access, but has a little bit more growth, because in a cash or in a cash buffer, you actually just want to make sure you can keep trade with inflation so that that money won't deteriorate over time.
And that is the main question, and I guess the main area of the concerns. The money market account, that fixed income, the unit trust, is that money guaranteed in there? Or could you, at a later point when you need that money, want to access it and you find that it actually has deteriorated or dwindled in value?
So money markets in general, what we've seen over time, normally keeps in line with inflation because it's linked to interest rates. So you will very, very seldom get to a place where money market will drop in value. So the only thing where money market sometimes is a bit of a downside is where you look at tax, because you are taxed on it. And luckily for individuals, there are certain tax breaks where you can get tax exemptions that is applicable. So, but in general, a money market is a fairly safe bet when it comes to cash flow or emergency funds.
There's some that have said putting your money in property is also a good way to have it, especially when you've got an access bond and you're able to access that money whenever you need it. Your thoughts on that?
So if it is your primary residence and you are paying off debt, yes, it's not a bad idea to do that in the short run. Ideally, where you want to get is when your property is paid off, then it's a different scenario. A lot of people say, now I'm going to go invest into property and I'm going to use that for my cash flow buffer. That's not a great idea, because you need that money immediately. And if you first have to wait for a property to be sold, then you're in dire straits before the property can be sold, transfers happening and all that type of stuff. So ideally, if you are saving up, but you have a bond, yes, a great idea would be property, would be your bond, access bond, because in general, if you take, say, prime -2 and you're on a 10.5%, there's no better way of investing your money. You're not going to get a money market rate or any other guaranteed investment at a 10.5%. So then a bond, paying off your bond and using that money is really great. But the but is, do not try to rely on that. In the long run, you want to get out of that bond.
Usually, when it's World's Week, you have a lot of institutions who provide those services saying, come in, all of South Africa, and we'll give you a will drafted for free. Now that it's Financial Planning Week, are those type of services also extended to South Africans, that they can contact people like yourselves and actually get some money advice?
Yes, it is, especially through the Financial Planning Institute that accredits and verifies certified financial planners. It is a good idea. However, be very, very careful. Like in any industry, there are people that try to exploit this week and say that they are there to help you with financial planning, but the only thing they want to do is sell you a product. I want to explain it this way. If you go to a doctor, you go to a doctor for a diagnosis. You go to a pharmacy for a product. So don't confuse the two. If you talk to a financial planner, the main question is, will you help me with financial planning and not just try to sell me a product? So keep that in mind when you interview a financial planner to assist you with your financial planning.
Really great advice there, Stian de Witt, and I guess you have to be aware of whatever conflicts of interest might exist with whoever is going to be giving you that financial advice. Thank you for that sage advice on this Sunday. That's Stian de Witt. He is Executive Head of Financial Planning at advisory firm NMG Benefits. Well, coming up for you in just a short while, we're going to take it down a notch as we check in with our reporter Theo Mashele. He is out and about on this sunny Sunday afternoon. afternoon at the Pick and Pay Wine and Food Festival. That's currently taking place at the Wanderers Club in Johannesburg. So we'll be touching base with him in just a moment. Do stay tuned.